welcome to a brand new edition of Inside Out on the Road, a show where we focus on individual stocks with in-depth analysis. We deep dive into financials and also tell you the key risks and triggers going forward. Well, let's get straight to our first stock today. My colleague Sonal focuses on a recently listed company and gets us a deep dive on Zaggle Prepaid Ocean Services.
On Inside Out today, we are going to talk about Zaggle Prepaid Ocean Services, which is a recent listing on the bourses, listed at 164 rupees a share, which is equal to the issue price. But since then, it has seen a one-way up move in terms of stock price. Let's talk about the company now. It is a company that offers fintech products and services and has one of the largest number of issued prepaid cards in India, which is in partnership with a number of banking partners. It has three revenue streams as well. The first one is the software fees, the second one is the program fees, and the third one is Propel platform fees. It is sector agnostic, so it basically caters to a number of sectors, be it the banking and finance space, be it technology, healthcare, manufacturing, FMCG, infrastructure, and automobile industries as well. And in terms of the name of companies, a lot of them, be it Tata Steel, Persistent Systems, Inox, there's Wockhardt, PCBL, Hiranandani Group, and Greenply Industries as well. This is just to name a few. In terms of financials, the reported numbers, let's talk about that first. Revenues have grown from 240 crore rupees in FY21 to levels of 553 crore rupees in FY23, and in first half it has come in at 184 crore rupees. Margins, after taking care of the ESOP expenses, they have come in at 16% in FY23. This is after 8.7% in FY21, and now they have come to levels of 8.1% in the first half. Let's now talk about their profits as well. 44 crore rupees in FY21, around that level in FY22 as well. And in FY23, they have come in at around 21 crore rupees. In the first half, they are at 17 crore rupees. The company gets maximum of its revenues in the second half of the fiscal year. That's around 60% and 40% in the first half itself. So it's time to understand more about the business. What are the different revenue streams? What are the expenses actually? And what's the future outlook? Let's get going and speak to the management now. Time to understand the business of Zaggle, and we have with us the management of the company, Avinash Godkhindi, who is the MD and CEO. Thank you so much, Avinash, for joining us. And as I was telling you earlier, this is a show where we try to understand the business and take a deep dive as well. So that's exactly the first question. Can you tell us what Zaggle really does? What are the revenue streams of the company, different segments as well?
Sure. Thank you so much for having me on the show and covering Zaggle. Truly appreciate it, Sonal. So we are a SaaS fintech company. We digitize spends. The operating word here is that we digitize spends. So think of any organization, right? They incur so many expenses, and these expenses typically fall in three buckets. There are employees, there are channel partners, and then there are vendors. We work with our corporate customers, customers like Tata Steel, Toshiba, a whole host of these companies, and we help digitize those spends for them. So create a platform, digital platform linked to the mobile app, which is used by the employee or the channel partner. And we are able to give them a 360-degree visibility as to what's being spent, how is it being spent. And this is all linked on one side with the ERP. So that's the system of transactions, system of records. And then you have the system of transactions, which is the card transactions. So we issue a whole host of prepaid cards and corporate credit cards in association with banks. And on our platform, you're able to actually see all the data come from these two platforms, and through pie charts and bar graphs, you're able to understand who's spending, how much is it being spent, why is it being spent the way it is, and also who has approved it.
Oh, okay, interesting. So if we simplify it, say the employee of Tata Steel has a Zaggle card. Correct. How does it work for them?
So for the employee, it's very simple, right? He or she is just going to spend the money. It's a Visa or a RuPay card or a MasterCard as well. And they just go and spend it at partner outlets. It could be any outlet, online, offline. And once you make that expense, on the dashboard, automatically the expense reflects. They also can upload the bills. So let's say you've incurred an expense on your personal card, a personal credit card. You could upload a bill on the mobile app. We have a technology called OCR, Optical Character Recognition, which is a AI/ML-driven engine. It reads the bills, and then you click submit, and it goes to your approver. The approver then goes ahead and approves the bill, and then the money is put onto your Zaggle card as a reimbursement. So it could be a reimbursement, or it could be an advance that you have taken, or it could be a part of your salary. The money has come onto the card. So the whole idea is there are different reasons why money would come onto your card. And once you spend it, that data, that intelligence, that insight is married to all the project codes, cost codes, location codes, etc., which are set up in the ERP. And from there, the insights are generated for the corporate SPOC.
Oh, okay. So you have 3 segments of your income stream,
Yes.
right? So can you explain that to us? How are they different? One is subscription model. The other 2 are very different. How does that work for you?
Software income that we generate is our billing to our corporate customers. Customers like Tata Steel, Persistent Systems, Toshiba, Greenply, a whole host of these companies, right? We also levy what we call as our program fees. These are not billed to the user or the corporate, but these are income streams that are generated when you make a transaction. So as a user, when you swipe the card, you generate interchange and other sources of income. And this we bill to our partner banks. Banks like Kotak Mahindra Bank, ICICI, SBI Cards, we work with Yes Bank, we work with IndusInd Bank, a whole host of banks. And these are partners who pay us the program fees. And we also get some commissions from partner merchants. So that's how we monetize.
Okay, so there are different sets of customers that you have, and from all of them, you get a certain set of fee, be it in form of commission or be it form of take rate. So are you seeing, or do you see regular change, or do you see a revision in those take rates from these different customers that you have? Which is the highest margin segment for you between the 3?
See, we hope that the change in the take rates is always on the upward side, right? And especially on the corporate side, we are always trying to bring more value to our corporate customers. And we hope that because we're bringing in more value to them, they're going to pay us a higher software fee, right? Now, that's the theory, and that's the attempt, that you demonstrate that you're bringing in greater value because you're bringing greater compliance, you're reducing leakage, you're reducing fraud. So there are a lot of benefits that we bring to the corporate. Apart from saving, number of person hours. So that's the whole idea. But of course, we make a lot of margin in our program fees as well, right? So the whole idea is to, we are one of the few profitable SaaS fintech companies which is listed, and profitability has always been one of the key parameters for us. As I always say, hey, look, what's gotten us here is that we've been frugal, nimble, and humble. And while other things change, and they should change, our endeavor would be to try and stay true to this mantra.
Okay, so you said you are one of the few listed companies in this SaaS fintech space who are profitable as well. Just for understanding of our viewers, who are the other peers for you, be it in the unlisted space or the listed space?
See, globally there are a bunch of ones. Sunil, there are companies like Brex, Ramp, Pleo, and some older generation companies like FleetCore, Vex, Expensify.
So no direct peer that you have in the country right now?
See, there are different spaces. Like for employee benefits, there are some other companies that compete with us. In rewards segment, we have some companies that compete with us. On the expense management side, we have companies like SAP Concur, which has been a player that has competed with us. But nobody has a single platform where they're creating
has all the 3 services
together.
that you have. Okay, that is interesting. And while we're talking about your business, I would like to see the office as well. I see a lot of interesting things. So let's get going and take a look at all of them and have this conversation there.
Sounds good. Sounds good.
Well, this game can go on, but I have to ask you, what are some of the expenses that you have to incur in the business? Is it something that requires high working capital, long-term debt? How does it work?
So I'll take a pause and answer this seriously because we're talking of expenses, right? So this is a new age business. It's a fintech business, and there's operating leverage. So as we scale, we're seeing efficiencies kick in, margins over time would improve. They've already improved in the last 11, 12 years. But the need of a little bit of working capital is there in a B2B business. So ultimately, we are invoicing partner banks, we are invoicing large corporate customers, and they have their own payment cycles, right? So they take a little while to make the payments. But I would say compared to traditional businesses, the need for working capital is very, very low, right? And this is not a business which requires continuous deployment of cash per se, because this is a cash generating business.
Get that point. So if you can give us some numbers when we talk about what your growth prospects or growth focus areas would be, how do you split the margins between the three segments? And what is the outlook, say, 2 to 3 years down the line once the operating leverage that you spoke about kicks in, the ESOP expenses are out of the way?
Right.
What will the margin picture look like? Will it still be high double digits? Because you did see an impact in the first half. It was a decline after growth that you've seen in the last couple of years.
So the decline was primarily because of our ESOP costs. Last year, we took about 14.5 crores as our ESOP cost. This year, overall, we are projecting about 19 crores. We've already accounted for about 13 in the H1, first 2 quarters. And that tapers down. So the next couple of years, we'll have a little bit in single digits, and then it goes away, right? So because in September 22, we gave ESOPs to all our employees who were on our payroll then. And that had an impact. It was an emotional decision. We wanted to, spread wealth. We wanted everybody in the company to make wealth. And that was the thesis there. The margin profile obviously expands. The margins in the software fees is much higher, but obviously making the software fees is a little bit tougher than your transaction income. Because think of it, Sonal, right? When I'm going to a corporate customer, I'm saying, hey, you are already incurring these expenses, and put it onto my payment instrument, and for 100 rupees spend, you continue to incur 100 rupee expense. I'll make out of the interchange and other incomes from my partner bank. That's so simple as a sale. I used to spend 100, I still continue to spend 100 on the Zaggle platform. All I need to pay is the software fee. Where the slight challenge comes is how much can we levy the software fee, right? So let me put it this way, Sonal. This year, our overall growth would be about 40 to 50%, keeping in mind that the money came in only after the first 2 quarters, essentially, right? As we deploy that capital, and we've essentially been largely a bootstrap company for the first 12 years. And now this capital has come in, which is about 450 odd crores, right? 492 crores as primary. So there is a huge amount of expectation that we have that in the coming years, we will be able to deploy this capital efficiently and ramp up our margins. I wouldn't want to go into the specifics. I gave you what this year's numbers are looking like. And we are very confident that margins would expand in the coming years. We've also not spoken about what we can do globally. This platform is a platform which lends itself beautifully for global markets. And there the margins are very different, right? Of course, it's not easy to walk into a US market, but it's doable. And that's what we will aim to do in the coming years to expand globally as well. And that again would help us expand our margins and our growth.
So when you talk about global plans, do you already have some presence in global markets? If yes, how much is it? And the expansion that you're talking about in global markets, will you look at some acquisition? Is acquisition on cards maybe in global or in domestic markets as well?
We are on the lookout for EBITDA accretive acquisitions, both domestically and globally. Our framework is very simple. What is it that allows us to make 1 + 1 = 11, right? If it's 2, 3, 4, we are not interested. The synergies have to be very, very pronounced, and it has to be something which we all can agree upon, right? That's what we're looking at, and that's something that we are actively exploring. We also see that the global market is a good place to go for acquisitions because it gives you foothold, it gives you customers, it gives you an understanding of what that market is.
Okay, that is interesting. So I think the rest of the conversation, we should just sit down over a cup of coffee and complete it.
Sounds good, Sonal.
So, you've spoken about how different segments work, what the growth prospects are. But are there any cross-selling, upselling opportunities available within segments that you operate in?
Oh, absolutely, Sonal. If you look at our cross-sell today, it's about 15%. But every company has employees, has vendors, and many of them have channel partners, right? So there's no logical reason why our cross-sell is so low. So one of the things that we are aiming for in the next 3 years is to increase that significantly. And when we have those conversations with our customers, they're more than happy to explore. And we've already started to see some very interesting progress on that front.
Okay, so it is a great possibility and opportunity that you always keep an eye out on for. So, you know, it boils down to this. When an investor is looking at your company, when a viewer is trying to understand your business, what are some of the possible risks that you can see, you can foresee? Would it be the global expansion that you're talking about? Would it be some impact on spending that we are seeing? Something that you think as a possible risk for the business?
Potential significant regulatory changes, right? Because while we are not directly under the regulation of RBI, as a partner to so many banks, you know, and our significant revenue comes from these banks, any regulation change in RBI does have an indirect impact on us. How do we address that? We basically broad base our revenues. We earn revenues from prepaid cards. We are one of the largest issuers of prepaid cards in the country. We broad base, thank you so much. We issue credit cards, and you know, you try to broad base it from our SaaS fees, right? But eventually, that is an aspect that we have to keep in mind potentially as well in our business. Other than that, I think the space is such, Sonal, every company wants to digitize. Every company wants to make it seamless for their employees to be able to, you know, submit their expenses. And we have tremendous tailwinds both in terms of digitization as well as tailwinds for fintech in terms of UPI, in terms of, you know, GST, DMON, and COVID has helped us a lot. So those tailwinds are really something which we believe will continue for a fairly long time.
Do you have a market share figure available? How do you stand versus the market or the other players?
So in the prepaid market, we are one of the largest, if not the largest. And as per the Frost & Sullivan report, when we published it while we were doing the IPO, our share was about 15%. I don't know the exact number, but you know, if you look at it, the space is fairly fragmented, and we are one of the largest players today in the space.
So last question before we wrap on this discussion and have our cup of coffee. You know, usually the second half of the business sees higher revenues. For someone who's reading your P&L and trying to understand the business, why is it that second half is better than first half?
So great questions, Sonal, and thank you for that. So about 60 to 65% of our revenues always come in H2, and H1 is about 35 to 40%. And the key reason for that, Sonal, is if you look at any of our, you know, lines of businesses and revenues, take the employee expense submission. Invariably, employees submit their expenses late, right? Closer to the end of the year, and that's when, you know, then, you know, those claims come in and the business comes through. Similarly, on rewards, a lot of companies tend to reward their channel, partners, etc. in H2. It's either Diwali, it's New Year, or it's, you know, just ramping up sales in Q4 because they're falling short of their targets. So given that nature, you'd always see that skew, and we've seen that consistently for the last, you know, 11, 12 years.
Okay, all right. So that explains, and we all are guilty of submitting our expenses during the second half, right? Avinash, it has been such a pleasure to speak with you and understand Zaggle's business. Explains a lot. So thank you so much for joining us today.
Thank you so much for this opportunity, Sonal. Truly appreciate it. Thank you.
Okay, with that, we'll wrap on this segment. But with that, it's back to you in the studios.
All right, that was a deep dive into Zaggle Prepaid Ocean Services. But it's time to slip into a short break. We'll be back with another interesting stock. Hurry Pipes is the stock on our Spotlight segment. Don't go anywhere.